Hello and welcome from Trend Signal for our review of the data and events in the markets for the week beginning the 16th of June. Just a quick review of last week. Bit of a downer on equities. Had quite a run in the US. We had the Dow Jones 150 points down, or just shy of 0.9% lower. S&P fared a little bit better, but still down on the week, down 13 or 0.67% down. The DAX is also weakish, down 60 points, which is pretty much 0.6%. Our FTSE, that was actually probably the weakest. That struggled after the news from Carney, Mark Carney, the Governor of the Bank of England, expressing his views on interest rates, which anyway pushed sterling up, but affected stocks. So with the FTSE, that was down 81 points or 1.8%. Really, we saw quite a bit of weakness in some of the banking stocks and in the house builders, especially as the realization that rates will be rising sooner than the market expected. FX markets were the main movers last week. Certainly, both weakness in the euro and in the US dollar, probably the euro being the weakest, while sterling, as I said, very strong as the first UK first interest rate rise looms in 5 years. So euro against the dollar, that was down 73 points, just over 0.5%. Cable, very strong, as indeed sterling was on all the crosses. 162 points to the good, just under 1%. Euro sterling, normally pretty quiet and uneventful, but that fell 140 points last week. That's 1.7%. So in euro, in the amount of euros to pounds, that's actually 125.5. So all those holidays in Europe getting cheaper by the minute. Aussie dollar, that was firmer. New Zealand dollar, very strong following the rate rise, 0.25% rate rise last week. So that's up 2% on the week. So all positive there. Gold, well, that benefited from the weaker dollar and also the geopolitical machinations in Iraq and in the Ukraine-Russian border. Gold up $21, 1.6%. Really, as I said, benefiting from a slightly weaker dollar and the geopolitical issues. As indeed crude oil did. Brent crude up $2.60. That's up 3.3%. So quite astonishing, really. And not seeing too much in the way of pump prices at the pump rising just yet, because the rise in the British pound against the dollar sort of partly offsetting that. So we might be sheltered from that rate, that crude price rise, certainly at the pumps for now. So last week was the eventual turn in equities, following a strong run over 3 weeks. UK markets, as I said, that was all Mark Carney. Gilts, they also fell quite sharply, whilst sterling rose. So data this week, we have quite a bit coming out. We have the FOMC meeting this week. That's the rate setting committee from the US, and inflation data here in the UK, which could give us more of a clue as to what may or may not happen with rate rises. And we've also got the minutes from last Monetary Policy Committee meeting, which will be particularly interesting, as I said, in light of Mark Carney's comments last Thursday at the Mansion House speech. In addition, US, we got the Philly Fed Manufacturing Index and also inflation data. Let's just have a quick look at the timing of those. And we're already Monday afternoon, so we've had some fairly strong manufacturing data out already in the New York State. That's the Empire State Manufacturing Index, up 19.3, expected 15.2. So that's a really strong number, actually, and that's certainly given the equity markets a bit of a lift. We did have a bit of a negative opening this morning on Monday morning in European equities following a poor showing in the Nikkei, reflecting some of the geopolitical events over the weekend, but certainly a bit of a bounce so far on Monday afternoon. So we jump really to Tuesday with the inflation data out in the UK. The question the markets are asking, does Mr. Carney know something about inflation and economic growth, or the combination of the two, or something to do with unemployment? Anyway, 1.7% is the projection for our inflation rate, which is well in check, certainly would be for now. We've got the ZEW Economic Sentiment Indicator. That sort of has taken a bit of a back seat just recently, but that will have an impact on the euro. 35.2 we're expecting there. We then jump to our own minutes from the MPC from the previous meeting. We are expecting a unanimous vote, but there might be some comments that may give us an insight into when this interest rate rise may happen, and it's certainly expected to happen well before Christmas now. In fact, I think it's penciled in for October. We'll be looking at that very closely when we get that news on Wednesday morning. Then we have the Federal Open Market Committee monthly meeting. So we'll get a statement from the Fed. We're not expecting any change, apart from obviously the maintenance of the reduction in this quantitative easing, reducing the monthly rate of asset purchases to 35 billion, which basically means they're going to end this quantitative easing by October this year, when there will be no more purchases of securities and no more priming of the pumps, financial pumps anyway. The market's going to have to stand on its own. Then on Thursday we have retail sales in the UK, unemployment claims in the US regular time. Then we have a very important data following on hot on the heels of the Empire State reading this afternoon, Monday afternoon that is. So Philly manufacturing index, Philly Fed manufacturing index I should say, expected 14.3. We may see expectations increase on that one, looking at what happened in the New York State. So that's quite an important number out on Thursday. That's it largely. Other numbers are out, but those are the main ones. Please put those in your calendar. That's it for the week. We'll reconvene on Thursday at 8 o'clock. Thanks very much for listening.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.